everybody, it's me, Myra, at Down Home Money, a simple approach to financial freedom. I hope you're doing well. It's Tuesday, it's my day, and today, be grateful, be humble, be human, and be kind. Y'all know I love great t-shirts, and this is probably one of my favorites, and you've probably already seen it, and it still means the exact same thing that we got to do. So today, I'm going to share with you another stock that I'm purchasing because a lot of people have been asking me, a lot of people want to get involved in real estate right now. But you know what? Real estate is still really high in some places. But I promise you, I have been through this. I've been in the real estate business for over 30 years, and I know what's getting ready to happen. And I know that a lot of people are jumping and buying houses right now because of the last interest rate increase of 0.75. We're going to have two more before the end of the year, which is really going to change everything, whether it be stocks, real estate, rents, everything is starting to change. And so I think it's so important that we talk about that because people are asking me, what should I do with my money right now? Should I buy stocks? And should I, or should I go buy real estate? Well, I think that you should do all of the above. I think that I've bought all throughout all the different markets, and because I buy and hold, it makes a huge difference. And so I try to bring you some stocks that I see that are, are underpriced, that have the value there. But right now they seem to be underpriced. Remember, I am a dividend investor. So I am not buying stocks to make a bunch of money on them when they increase. That's not, I would love to do that, don't get me wrong. But you're either a growth investor, a value investor. I'm a dividend investor that has value and some riskier stocks for higher yields. And that's what I'm doing, but it depends on who you are and what your age is and what you're looking for. I was looking to turn my active income into passive income, and I had sold some real estate that I've owned for years, which means I had built up a lot of equity, because if you owned real estate in the last 20 years, you could sell some of your properties and make 2 and 3 and 4 times what you paid for them. So I've sold about 5 or 6 properties this last year and a half, 2 years, and I have been investing it in a dividend portfolio. And so that's what brought me here today. So I'm here to share with you a stock that you can get in real estate. This will allow you to get in real estate without, making ready houses, without fixing toilets, taking those AC calls in the summer, because y'all know I'm in Texas and we get a lot of those calls. So I wanted to bring one to you, and I think you're going to like this stock. So let me share with you a little about this company, and we'll see what you think. All right, Arbor Realty Trust. So this ticker is ARB, Arbor Realty Trust, Inc. So Arbor Realty Trust, Inc. operates as a real estate investment trust, which engages in the provision of loan origination and servicing for multifamily, senior housing, healthcare, and diverse commercial real estate assets. It operates through the structured business and agency business segments. The structured business segments offer structured loan origination and investment services. The agency business segment is involved in agency loan origination and servicing. The company was founded by Ivan Kaufman in June of 2003 and is headquartered in Uniondale, New York. I think right now, it has had it's at its 52-week low, like a lot of stocks right now, right? A lot of us have seen a lot of them at their low for the year. So the 52-week range, the high was $20.73. The low was $12.31. And it has been paying a 9.77 dividend yield. That's why I'm buying the stock. I like that. And at the same time, the forward PE, which is price per earnings, is 8.04. Well, the S&P 500 is 21.32. So you can see where I'm finding value in this stock based on the price per earning. And, you know, I love me some Market Grader. You can go to Vanguard and see what Market Grader grades each stock. It's one of my favorite things because it gives such a great report and I can study the stock. So Market Grader for value gave it an A-. So for profitability, an A-. So for cash flow, which it takes cash flow to pay dividends, it gave it a B. And then for growth, a B+. So just to share some more details about this company, because I think that, you know, it's important to understand what you're investing in. For me, you know, my portfolio is extremely diverse. I have over 50 stocks in it. And when I say that, that includes ETFs, that includes index funds, that includes, you know, just individual stocks. But most importantly, it includes a lot of aristocrats that pay dividends. But usually the aristocrats are going to pay a lower dividend. When I say lower, I mean anywhere from 5 down. And so I've done some other stocks to bring my rate of return and my yield higher. And so that's the ones I have to watch, and I share with you they're a little more risky. They do pay higher dividends, whether it be a monthly dividend or a quarterly dividend. Usually the monthly dividends are higher. And so there's lots of great aristocrat stocks. If you are lower on the risk spectrum and you want less risk, then you need to be buying, you know, the aristocrat stocks, the AbbVies, the Altrias, the Realty Income, ticker O. You need to buy some of those. But if you are looking at some higher, right now, the higher yields, the prices are right. I mean, it's unbelievable how much the prices have come down, and you can get in them right. And you can make some great dividends. Now, on the riskier ones, I take a cash dividend. Then I invest it in something else. So, like maybe I've decided I want to make $200 a month on this stock. How many shares do I need to buy for it to throw me off 200 cash dividend a month? And then I figure out that number based on how much like if it's 10 cents per share. So let's say if I want to make $100 and it's 10 cents per share, I'm going to need 1,000 shares. No. Let me get my trusty calculator. Yeah. I'm going to need 1,000 shares to make $100. Sorry, that just didn't seem right. I was looking at that going, what? But I was right. So I would need 1,000 shares if it pays 10 cents per share and it pays it on a monthly dividend. I would need 1,000 shares at 10 cents per share would be $100 I would receive a month. And it could be done as a cash dividend. So they will put that in your settlement fund, your money market settlement fund, and then you'd be able to buy something else. And then maybe take that money and reinvest in your aristocrats for long-term investment. So that's kind of my strategy. And y'all know, I'll put the video up here, but I made $18,000 last month in my dividend portfolio. It's a really good month because I had a lot of really high-paying quarterlies like Verizon, AT&T, and EPD. They all paid last month, so it's a big month. And I have a big investment in all 3 of those. What I'm building is I am building something more passive than rental property. I'm keeping a lot of my real estate. I have a lot of real estate, and I'm still keeping that. I'm just diversifying a little bit. I've also given some real estate loans, and financing some properties for people. So I'm just diversifying my portfolio, and I'm looking for more passive things. And that's why I started this channel in February of 2020, because I wanted to build a passive income, and I wanted you to be able to watch my journeys. You can check out my journey of dividend investing and watch the videos from the very beginning when I didn't have hardly any money invested and as I went. So it's not how much money you make, it's how much money you keep. And are you buying assets that throw off a passive income? That is truly what this is all about. It is about we all work really hard and we blow our money and we buy stuff that doesn't give you any benefits at a later date. So you also go buy this item on your credit card, and it's on your income from the future, because then you let the credit card ride out. And so you're spending your future income to buy this stuff. Why not on your budget do a line item, $100, $200, and let's build you a passive income stream that will take you into the future so that you can work because you want to work, not because you have to work. That's what we're about. Be sure and sign up for our newsletter. We're doing a monthly newsletter. Be sure and sign up for it. You can go to Down Home Money and click on sign up, and you'll be signed up, and I will not bombard you, I promise. Also, don't forget, Amazon, Down Home Money, A Simple Approach to Financial Freedom. You can order my book, and it's on Audible. If you like a Southern accent, you're going to want to get Audible. If you don't, I'd get the paperback. All right, guys, I'll see you next Tuesday. Please give me some comments. Do you own ABR? Did you buy any NLY? What are you buying? We've had a big dip in the last week or so. What are you buying? And how are you spending your money? And how are you working towards your future so that you don't have to work? I'll see you next Tuesday. See ya.